Welcome back to the channel, crypto family. If you're tired of generic pie hype and want the actual data, supply pressure, institutional moves, chart levels that matter, you're in the right place. Smash that like button if you're holding pie or just here for the chaos. And subscribe, because December is about to get wild. Let's break down what's really happening. So here's where we are. According to Dung Pikachu, Pi Network just achieved something most community projects never do. Official recognition in 19 EU member states through Pi Euro. We're talking Austria, Germany, France, Spain, the financial heavyweights. The token is trading on Binance, CoinGecko, and Crypto.com at around 19 to 21 euro cents, which isn't exactly moon territory, but it's real liquidity in regulated markets. MiCA compliance? Check. Cross-border transactions? Available. This isn't vaporware anymore. Then Valour Inc. drops an SEC filing showing they've launched a Pi ETP, exchange-traded product, on Sweden's spotlight stock market. This is the same company offering ETPs for Shiba Inu, Kronos, and Ondo. They're charging a 1.9% management fee, which means they actually believe Pi has staying power. The V23 protocol upgrade just rolled out in September according to Valour 566108161. Smart contracts are getting sharper, AI integration is on the roadmap, and developer tools through Pi App Studio are improving. The network boasts over 60 million users, which sounds impressive until you realize only a fraction are actively transacting. Still, the infrastructure is maturing. So, CiDi Games partnership? That's adding real utility, letting players spend Pi in actual games. Not revolutionary, but it's demand generation at a time when Pi desperately needs it. Now, let's talk about what keeps Pi traders up at night. Thin liquidity is Pi's Achilles heel right now. When order books are shallow, even modest sell pressure creates violent price swings. We've seen this play out since the Mainnet launch in February 2025. Every unlock cycle tests the market's ability to absorb new supply, and December's is the biggest yet. Weibomancing 1B recently flagged a 7 million PI token transfer on the Stellar Ledger, whale movement during a price dip to 23 cents. Now this analyst is known for optimistic takes, so we should read this as either smart accumulation or someone repositioning before volatility hits. But, here's the uncomfortable truth. Whale accumulation only matters if retail and institutional demand follow. Right now, that demand is questionable. So, the 4-hour chart reveals the technical nightmare traders are staring at. Pi broke below its rising channel in late November, dropping into a demand zone that previously held. The current price of 23 cents is sitting right on critical support at 22.3 cents. Hold that level, and there's breathing room toward 23.06 cents, maybe even 24.76 cents if momentum builds. But lose it? We're looking at a swift drop to 21 cents, where bigger players might step in, or, might not. December's unlock changes everything. When 190 million tokens hit circulation, sellers will appear. Some are early miners cashing out, some are skeptics who've waited years for liquidity, some are just profit takers. The question isn't whether selling pressure comes, it's whether buying pressure matches it. And right now, honestly, the market is giving us mixed signals. The Pi team is trying to counter this with the CiDi Games partnership, adding utility through gaming. Smart move, honestly. Gaming economies thrive on in-game currencies, and if Pi becomes a spend-and-earn token across multiple titles, that creates organic demand cycles. But, and this is crucial, gaming utility takes months to ramp up. The unlock happens in December. The timing is awkward at best, catastrophic at worst. Alright, let's cut through the noise with what the data actually tells us. Pi Network is at an inflection point, and December will separate hopium from reality. First, the bullish case. Europe's MiCA compliance and the Valour ETP are not small wins. Most altcoins never achieve regulatory clarity in major markets. Pi now has infrastructure that allows pension funds, family offices, and conservative investors to gain exposure through traditional brokerages. That's a demographic that doesn't touch Telegram bots or DeFi wallets. It's patient capital, the kind that builds floors under price action over quarters, not days. The V23 upgrade positions Pi for actual smart contract ecosystems. We're not talking Ethereum competitor overnight, but developer tools improving means more apps launching on Pi's network. More apps equal more utility. More utility equals more reasons to hold rather than dump. The CiDi Games deal, while modest, signals the team understands that utility beats speculation long-term. If gaming integration works, it creates a use case beyond store of value narratives. Now, my analysis on the bearish side. 190 million tokens unlocking into a market with this liquidity profile is a recipe for volatility, and probably downside volatility. Let's be honest, Pi's current holder base includes millions of people who mine tokens on their phones for years with zero investment. When those tokens become liquid, conversion to cash is inevitable. That's not FUD, that's human behavior. People who got something for free sell it when they can. The chart's message is crystal clear. $0.2230 is the line in the sand. Technical analysis doesn't predict the future, but it shows where traders are making decisions. If Pi holds that support through December's unlock, it signals genuine demand absorption. Buyers are stepping in, liquidity is improving, and the market believes in Pi's long-term narrative. That opens the door to $0.2476 and higher. But if we slice through $0.2230, especially on heavy volume during the unlock, the next stop is $0.2100. And here's the thing, $0.2100 might not hold either if panic selling kicks in. We've seen this movie before with other community tokens. Massive hype, loyal base, then a supply event exposes that most holders are tourists, not investors. One trader summarized it well. December's unlock isn't just about supply, it's about ecosystem maturity. That's accurate. If Pi's partnerships, EU recognition, and developer ecosystem create enough demand velocity, the unlock gets absorbed, markets move forward. But if those elements are still too early stage, the unlock overwhelms demand, and we get a correction that could take months to recover from. My take. Pi is better positioned than most people think, but worse positioned than Pi maximalists believe. The regulatory wins are real, the infrastructure improvements are tangible, but tokenomics don't care about feelings. 190 million tokens need buyers, and buyers need reasons beyond we're a community to deploy capital. Gaming utility, EU liquidity, and institutional products provide those reasons, but they're not mature yet. Scenario 1. Strong hands win. The unlock happens, early sellers cash out, but institutional buyers and whales who've been waiting for lower entries step in aggressively. We see a dip to 22 cents, maybe 21 cents, then a sharp recovery as new capital recognizes Pi's undervaluation relative to its user base and regulatory progress. Scenario 2. The slow bleed. Selling pressure just overwhelms demand throughout December. We break 22.3 cents, test 21 cents, and then, honestly, drift lower as disappointed holders exit. Price kind of settles in the 18 to 20 cent range, consolidating through the first quarter of 2026 until the next catalyst finally emerges. Scenario 3. Capitulation event. The unlock triggers panic selling. Pi crashes through 20 cents, and we see a flush to 15 cents or even lower. Thanks for watching, crypto family. If you want more deep dives on altcoins that actually matter, check out my other videos. Don't forget to subscribe because the first quarter of 2026 is shaping up to be absolute chaos, and we'll cover every major move. Drop a comment with your Pi price prediction for December 31st. Let's see who gets closest. Quick reminder before you go. This video is for educational and entertainment purposes only. Cryptocurrency investments carry substantial risk, including total loss of capital. Nothing I've said constitutes financial advice. Always do your own research. Never invest more than you can afford to lose. And just remember that crypto markets are volatile, unpredictable, and can be manipulated.